we have a new segment now. This is, of course, the first week of 2017. How are charts shaping up? We start with Sudarshan Sukhani today. Sudarshan, good morning again. Let's start with the Nifty, because 2016 was so volatile. We were in a 2,000-point band almost. Do you think the band will be narrower at least?
Yeah, good morning again. But before I give you the outlook and for 2017, I must explain that the views are now based on what we see the markets today. In 2016, many experts would have given their views, but no one imagined that the currency would be demonetized. No one imagined that Trump would become president, or even that Brexit would actually take place. So my point, Anuj, is that we really don't know the future. We are only discussing what we can perceive today. With this caveat, I have to tell you that the Nifty is likely to be in a narrower range. That's a pity, because yes, last year was narrow by itself. The chances are that we have lower end of the range at somewhere around 76, 7700, which means that the Nifty has the possibility of going and testing those levels sometime during the year, probably in the early part of this year. And an upper end at 9100, which was the previous highs. So 2017 could easily be an year of consolidation. The view is mildly bullish because the downside seems to be limited to 300 to 400 points, and the upside is open to 800-900 points. And of course, if in the last part of this year we break above 9100, then the end of the year could be spectacular. But currently, the Nifty could be in a trading range with a bullish bias. The actionable idea from this bullish bias is that we should be buyers on dips.
Okay. Well, before I ask you, what would you buy on dips? Let me get the other chart as well, Sudarshan, the Nifty Bank.
Well, the Nifty Bank is disappointing, and this is just to tell you how little we know of the future, Lata. In the morning, almost all of us were bearish, and the markets have confounded us by actually the Nifty Bank going up 100 points, as Anuj was saying. So the future is really uncertain. But within that uncertainty, the charts for the banks are not at all conducive for any kind of a rally. The best case scenario for the banks could be that they could consolidate even more than the Nifty and not go down. The risk of a decline in the bank Nifty in individual PSU banks is significantly higher than in other Nifty stocks. So I would be avoiding the bank Nifty except for buying for small gains only. That would happen during the year.
Okay, Sudarshan, hi, welcome back. So, let's talk about the commodities. Gold or silver, which one will give you more gains in 2017?
Well, the chances are that gold and silver will both be into some kind of consolidation. But here also, the view should be to buy on dips, because this is 2017 is really going to reward people who are willing to take risks, and risks on the long side of the market. So the gold has a trading range between 25,500 approximately to 30,500. 5,000 points is a lot of money to have trade inside. Gold would be a better opportunity as compared to silver. Silver's trading range could actually become narrower. So I would say that gold is the preferred choice for trading. Every time you see one monthly or weekly dips, it's a buying opportunity. Don't expect big gains.
Okay, your big bet for 2017 seems like Reliance, Sudarshan. I mean, it's one chart that's flattered to deceive for 5 or 6 years now. Almost every time we feel that, this is the real rally in Reliance, and then it fizzles out. Do you get a sense that this time it's different?
Well, as you said, Anuj, every year perhaps we think this time it's different. But it does appear that for Reliance, this time is going to be different. It's a large cap. The chances are, after a 7-year consolidation, it's on the verge of breaking out above 1100, 1120. I think everyone should be positioned by buying Reliance as an investing idea. If the breakout happens, then you could keep on trading on the buy side, on the long side in Reliance throughout the year. Reliance could be the big name of the year, and I would still say, be positioned as an investor. Don't wait.
Okay. Well, usual disclosures. Reliance owns the company that owns the channel you're watching. That's our disclosure, not Sudarshan's, of course. Sudarshan, outside of Reliance, in fact, outside of Nifty, what's a great chart to watch? Stock chart.
Well, I would assume there are plenty, but I would suggest NMDC. NMDC had a big bear market that lasted for years. That bear market is ending. A very significant accumulation is going on in the stock. Remember, it fell from 300 to 100. 300 to 90. So it has a lot of potential for going back, and significant percentage gains can be forthcoming. I have investment positions in NMDC, but that's not the reason. The reason is that it's one of the better charts for this year. It also covers metals, it covers a stock that's willing to bounce, it's a PSU, it has everything going for it.
Okay. And, you know, the dollar index is something that everyone's tracking these days just to get a sense of which way emerging market currencies could go. Do you expect further strengthening beyond that 102 mark?
Well, I think so, Sonia, although I would assume that Lata is far better poised to answer that question. The chart suggests that any instrument, whether it's a commodity or a soft index or anything else that is making lifetime new highs, persists in doing so. And the dollar index has broken out of a long congestion, a long trading range. So the chances are it has much higher levels to go to, which means for us, even though the rupee could outperform, 70-50 to the dollar seems to be very likely sometime during the year.
That'll be good, actually. That'll be good for stocks, Sudarshan. I'm a little unhappy that after the dollar has strengthened so much, the rupee and the dollar parity remains at about, whatever, 68. That shouldn't be. We have a right to depreciate, and we shouldn't be denied that right. Okay, Sudarshan, finally, what about the mother of all equity charts, the Dow, whether you want to follow the S&P 500 or the Dow? That index, of course, is at all-time highs, very close to it. Does it go on that way? 2017 is the big year for Wall Street indices?
Yeah, the mother of all, let's consider the S&P 500, which is a much bigger and more tracked index. I think there's more upside there, at least for the first half of this year. The very fact that it's a lifetime high, it's in a trading range and probably breaking out of that range on the upside, suggests that the US markets will be robust and continue to notch gains. Last year they had gains of 10%. It's difficult to say if they will match those gains, but I don't see any weakness in the markets, which means the US markets could remain outperformers.
Thank you very much, Sudarshan, for your crystal ball gazing and for the caveat. This is the future as we see it from now, and we will evolve our view of the future as and when events hit us. That's a general caveat for our chartists. Thank you very much for kicking off our